The lithium market continues to take shape rapidly, care of technology improvements, government interventions, and energy transition drivers. 2024 was a year of many milestones for the lithium market, including global lithium demand total over 1 million tonnes LCE for the first time, growing by 30% year on year, care of benchmark. Global EV sales reached more than 17 million units, growing by 23% year on year, or 3.4 million units on the prior year, the data care of ProMotion. EVs themselves moved through a key inflection cost point within the China market. China EVs offering a more cost-competitive alternate to their internal combustion engine equivalent. China's EV market penetration in the second half of 2024 increased to roughly 50% of total sales, resulting in 11 million EV sales, or 64% of the global EV sales. So a remarkable step up there in China. As it relates to mass energy storage, or ESS, demand grew by an incredible 53% year on year, with 205 gigawatt hour of global storage deployments. This data care of ProMotion. What's behind this? Well, significant disruption is underway due to these rapid advancements in technology. Every day, more headlines are emerging for auto company mergers, breakthroughs in autonomous driving, ESS, and developments in electric vertical takeoff and landing, or eVTOL vehicles, as they're called, to name but a few. At the core of this disruption is a technology revolution where digital intelligence and electrification are intersecting, they're combining, and are self-reinforcing. Now, to share some of the recent anecdotes in this space which illustrate this, Jensen Huang, the CEO of NVIDIA, described a key part of the future of his company as predicated on three key growth areas for robots, being agent robots, self-driving cars, and humanoid robots. Now, I note all of these will need batteries, and I also note the distinction Jensen's made that cars are becoming robots. Also, the CATL co-chairman, Pan Zhang, spoke at the World Economic Forum recently, where he recharacterized EVs as EIV with I referencing intelligent. So again, another example of this digital influence combining with electrification. Now, moving to a more practical example is the incredible progress BYD has been making. BYD sold over 4.25 million passenger cars last year, positioning itself as the second largest EV manufacturer globally, just behind Tesla. BYD surpassed Toyota's EV sales in the Japanese market in 2024, marking a significant milestone. And BYD officially entered the South Korean market this month, a bold move that brings it into direct competition with the domestic e-manufacturers in South Korea. So we continue to closely monitor BYD's advancements as it challenges established players in key markets worldwide. Another notable anecdote of supply chain disruption comes care of CATL. The battery maker CATL, of course, being one of the largest globally, launched what they've called their Bedrock chassis. This is an integrated product that provides not only the battery, but the full chassis integrated, and it's been safety tested. Thus, this change obviously changes the role of the battery maker, but further simplifies the automobile supply chain, and no doubt will lead to reduced costs, care of CATL's manufacturing scale. So we watch this with interest. But as you can see from these brief examples, much change is underway, and all of this change are growth markets, which of course the lithium market serves as a key subset. So moving to pricing. The lithium market has been rebalancing following the highs of calendar year 20 and 21. Following recent supply curtailments over the past year across the industry, we note that spodumene concentrate pricing has lifted off the lows of US $750 per tonne that we saw in October last year, and now moving into the range of between mid-850s to low 900s. Pilbara Minerals continues to see inbound interest from downstream industry participants, both in relation to near-term offtake and long-term opportunities surrounding expansion optionality that Pilbara holds. And while volatility is expected to continue as the industry continues to take shape, we remain focused on the incredibly strong long-term fundamentals this exciting market presents for our shareholders and all our stakeholders connected with the business.